Good morning, everybody, and welcome to this week's Motor Trade Radio, the only industry weekly podcast. And it is Saturday, the 30th of November, and you're joined by myself, Philip Nothard.
And me, Curtis Hutchinson. So we're at the end of November, Phil. How did that happen?
I know, it's and do you know what's really worrying is the time now until Christmas, and I hate to say that because people start talking about number of sleeps and things like this, but it's kind of everybody I'm talking to, and it's not slowing down, is it? There's still a lot of activity, and I think it's going to continue right up until the end of the year. And we were selective, weren't we, on this week's headlines, because there's still a lot going on at the minute. There's no slowdown at all.
Yeah, we're actually squeezing two shows into one today because there are so many headlines. But we'll be broadcasting throughout December, won't we, Phil? As you say, we're the only weekly podcast for the motor trade sector. So we're going to keep rocking through December.
Yes, we will. So headlines this week then, Curtis. There's like I say, we've been fairly selective, but there's some good ones in there.
There are, yeah. We'll start off in a minute with an update on a story that broke last week just after we finished recording. So that's changes at Group 1. We've got the lowdown on what's happening at eBay Motors Group with the coming together of motors.co.uk, Gumtree and eBay Motors. There's some financial results from both HRON and Multipoint. There's quite a few stories this week on the used car sector, on residuals, how they're stabilising. Some interesting observations on EVs and how EV residuals are performing at the moment. Plus, we've got the latest forecast from Cox Automotive on used sales this year and into next year. And finally, this week, we'll take a look at the used car dealer awards from Car Dealer magazine, which the awards ceremony was last week. We weren't there. I wasn't invited. Were you, Phil?
I have to say, actually, I was. I couldn't go.
So, oh, right. Okay.
I'll be honest, because if I say no, then I will get challenged on that one, particularly from internal. So, yes, we did have a table, and I was invited to attend, and there was obviously a lot of people that I had a lot of networking and catching up to do, but I couldn't attend for one or two reasons. So, it just looked like another great night with those guys.
Yeah, I was going to say, if it's any consolation, I felt as though I was there because I was tracking it on Twitter and LinkedIn. So I did feel as though I was in the room.
Exactly. So we have got, we've got something coming next week, which we'll share at the end of this morning's podcast. But the first story, as you say, this sort of broke just after we'd recorded last Saturday's, and this is in AM Online, and that Darren Guiver, he was the MD of Group One Automotive UK, and he leaves the post, and that broke last week, didn't it? So he was obviously part of he led the Spire Automotive, so he was managing director of Spire Automotive, which he founded until they sold out up to the Group One business. So yeah, great operator, and we had him on the podcast, didn't we, recently? Fantastic.
We did, yes. Yeah,
Ben, the leadership challenge
as part of the Ben challenge. Yeah.
So what's your thoughts on this one? Obviously changes at the top again. We've been talking obviously recently about the Andy Bruce and 900-minute lookers. We've talked obviously about the Pendragon with Mark Herbert and things around that. And again, it's yet another change at that senior level within the sector with one of the AM 100 groups.
Yeah, and you know what? It's funny. We don't see many changes at the top of the dealer groups, but this year we've as you've pointed out, we've seen a succession of them. So there is a bit of a reshuffling going on, and as you say, Darren leaves as MD, and he ran Spire actually for it was over 10 years because I think the company launched in around 2006, and it was acquired by Group One, as you say, in 2016. 2016, and that was a sizable business because they operated 12 sites around North London and Northwest London, representing the likes of BMW, Mini, Seat, Skoda, Jaguar. So that was a really good business, which is how it came to the attention of Group One. So Group One acquired Spire back in 2006. Darren led the group from 2017 until now. So interesting move there. There's a lovely quote from him in the piece, and fair dues to AM. They actually spoke to Darren after the announcement, and they put to him, is it? Are you going because of the amount of pressure associated with the sector at the moment? And he says, no, not at all. He says, I've never felt under any pressure. I've been in a position where I haven't had to work for financial reasons. I've been here because I love being part of the business, but the time just feels right to take some time away. So, good on him. Yeah. And as you point out, he was one of the 3 water bike riders in the Ben Challenge back in the summertime.
He was,
yeah. Tim Tozer and John Wakefield. He came on to the Motor Trade Radio podcast to talk about their activities, and they raised over £202,000. So, an amazing achievement there.
No, and it's great, and they say so great performance, like you say, with the turnover that they've achieved and where he took the business in the UK after the acquisition and led that to. What they say there that the aim one of 9th ranked franchise retail group by turnover back in March of 2018. So, again, fantastic result, and they are saying that I think what's he called? He's taking over as the Earl J. Hesterberg.
Yes,
he's taken over as the UK arm at the minute, isn't he? I think in the meantime. So, again,
yeah, he's the US boss. He's the group boss, so he's going to be running the UK operations in the, I guess, short to medium term. But it's worth pointing out that under Darren, there's been a couple of key acquisitions recently. So March last year, they bought the Robinson Motor Group's Mercedes-Benz businesses, which was, a number of sites, across Peterborough, Kings Lynn, Norwich, Cambridge, Bury St Edmunds. So, that gave them a large Mercedes-Benz cluster. And of course, August this year, Group One acquired 5 Volkswagen sites from Inchcape.
Yes, yeah, and again, so good on him, as you say. If he's in a financial position that he can make that decision, and that it's not obviously related. I think it's just coincidence, isn't it? As I said right at the start, with the other changes at that very senior level, I think they are more of a coincidence rather than all relative to the market. So, again, good on him, and we'll see. Because don't forget, I think John O'Hanlon retired once, didn't he, or walked away at one point?
Yeah, he won't take kindly to it being described as retiring, but yes, no one really chooses to leave the sector for long, do they?
No, it's always it's a difficult one to leave. As these guys will definitely know, and some of the people listening to today's podcast will know as well. It's a sector that's in your blood, and it's very difficult to get out of, and going doing other things doesn't always work. But again, hopefully we'll see Darren back in the sector at some point in the future once he's made his had a bit of a break in the meantime. So moving on to the next story, and this was first broke on the auto retail agenda on Sunday evening, wasn't it? That they brought the news ahead of the public announcement on the Monday morning that eBay, Gumtree and Motors.co.uk have combined as eBay Motors Group. And this is a story that has been quickly followed up in AM online in a lot more detail. But this is a case of, it's about the rebranding of those 3 businesses in the B2B element, not the consumer. So the consumer businesses remained the same, don't they, I believe?
Yeah, you're absolutely right. This is a B2B story. So the three brands, as you mentioned, motors.co.uk, Gumtree and eBay, come together as the eBay Motors Group. And that's really the dealer-facing brands. The three brands themselves will continue in their own rights as consumer-facing websites. And this is really the culmination of, I guess it must be 9 months work, because Motors.co.uk was acquired by eBay from Cox Automotive 9 months ago, and this is the first sort of outward signs of what the new strategic direction will be. And the announcement was made, as you say, last week, but the formal relationship goes live in January 2020, and it'll basically give dealers the opportunity to have their stock displayed over the three sites. So it's sort of maximising on those sites, those outlets, and the back end is coming together. So things like stock management, response reporting tools, and there's just one single point of account management contact for dealers. So it's really simplifying the back end. It's making it an awful lot slicker, and it's all coming together under Phil Jones, who is head of eBay Motors Group. And you may have seen on LinkedIn a couple of weeks ago there was a bit of a teaser I put up, because I did an interview with Phil about this, which will be put out as a video really over the coming days and weeks, just explaining more thought behind the process and what it will mean for dealers.
Yeah, and it'll be interesting when we start to see, because obviously with there's, we won't get into the competition in that sector, but there was always this when obviously Cox Automotive, and there's a nice story in Fleet News actually that quotes our CEO at Cox Automotive, Martin Forbes, on when we sold the business to eBay at the time, and the work and effort that Phil Jones and his team have done. But again, looking at sort of this power of those three classified consumer brands coming together as one, and where that could take them in that sort of classified consumer marketplace. And I'm looking forward to potentially seeing some more of the data and the insight that come out of those three heavy brands within that sector. Like you say, it'd be interesting as we start to see more from this, because I think we've over the recent months since the acquisition from eBay, I think there's been a sort of a period of migration, hasn't there? And this is kind of the first start of what's going to come out at the other end. So it'll be interesting when we start to see some of that.
Yeah, and there was an interesting stat in this about the sort of touch points that dealers can expect, with 92% of buyers willing to use at least one of the three sites across the group. So that's indicative of the sort of spreads that the three sites have.
Yeah, exactly. So in the next story, back into the used car market, and it's that time of the month where we get the cap HPI movement figures, and obviously we've spoken about them quite a bit recently with the mid-year realignment and changes to the values. But again, they're talking motortrader.com now, where the used car market stabilises in tough roller coaster year, and that's where we've seen a bit of a challenging year. Changes to that sort of pricing, used vehicle pricing through the April, May, June, July, that Q2 time of the year into the start of the Q3. And I think those we started to see, and we've spoke about it on last month, didn't we, when we saw the results, that just started to ease off now, started to get a little bit of stability. We know that supply and demand is more in the favour of demand at the minute, and that has been reflected in the performance that Cap HPI have put in their editorial this month.
Yeah, and what caught my eye in this particular story was how petrol values are performing in relation to diesel. Their petrol values down 0.7% compared with diesel, which is just down 0.5%. And bearing in mind all the pressure that diesel is under at the moment in the new markets, that's quite an interesting observation. But of course, it's down to the number of petrol vehicles now coming into the used sector, because if there's fewer diesels being sold, more petrols, then more petrols are entering the used sector, and that's naturally having an impact on values.
Yeah, you're right. I think we did predict this at the start of everything that started to happen in terms of that diesel gate and that decline of market share within that new car space and how it's continued to decline. We saw the results for October, and obviously in a few weeks' time we'll get the results for November. But again, you start to see where that drop off on diesel, it's going to affect supply. We are seeing that now in the wholesale market and that used car market, and unfortunately used car buyers, they're not as fickle in terms of their opinion of the political media that comes out. They just want a diesel, and the retailers have always said that there is a demand in the used car market for diesel, and that's showing now in the values as CAP HPI have said, and that oversupply of petrol slightly further in terms of the decline in values. But again, we are going to start to see, as we talk, we're talking the new car market around EV, and we're going to talk about EV in a second, but that EV and alternative fuel, that will start to take up some of that sort of oversupply of petrol and move the volume into that alternative fuel sector. So again, pre-Christmas going into December, fairly flat. I think, looking at some of the figures, there may have been justification to increase potentially, because there is a strong demand at the minute. I think reports are that performance of CAP has been fairly positive, performance of conversions has been very positive as well. So again, there is, to come out sort of reasonable level just ahead of January is about the right feeling at the minute.
Yeah, which takes us into our next story, also on AM Online, with the headline, Affordable EVs Move into Used Car Sector's Fast Lane. Now, this is quite an interesting one, because it's showing how the performance of some of the more sort of mainstream, if we can call them mainstream, EVs are performing in relation to the top-end premium EVs. So, again, based on analysis from CAP HPI, so values for models under £17,000 at 1 year and 10,000 miles have actually strengthened over the last 24 months, while, as I say, the premium EVs are weaker, according to CAP HPI. And this is illustrated, this is actually very well illustrated by CAP HPI, showing that in November 2017, a 1-year-old 10,000 mile Citroen C0 was worth around £6,000. Today, a similar example is valued at just over £11,000. Meanwhile, models such as the Jaguar I-Pace, Audi e-tron and Tesla Model X have all seen values reduce over recent months.
Yeah, I think we're starting to see, as volume sets into that EV sector, and I think the challenge has always been that, in the evolution of that EV sector, the volumes have always been low, and in relation to petrol and diesel, that EV sector is still low in terms of its volume. So changes in values can affect the results fairly drastically in terms of performance. But again, as we're moving through, as confidence becomes, enters that sector from a retail perspective, dealers perspective and consumers perspective, then, the values will stabilise and, as you've seen, increase in many cases. That, expect confidence in that product, isn't it? And variable in terms of, choice of vehicles, type of vehicles and confidence in those vehicles as we move forward. So again, it's great to see that we're seeing some performance stats on this, and that we are seeing a positive result around that EV sector, but we just need volume, don't we? But
yeah, no, absolutely right. And it does just show that there is a market for those. I keep using the term cheaper. It's all relative, but there is a market for EVs amongst consumers looking for maybe a second car for things like city commutes, certainly within the M25, that must be an issue now with the ULEZ and the talk of the ULEZ expanding over the next year or so. So that's where the demand's coming from, possibly more so than at the premium end in the used car market at the moment.
Yeah, and it's going to be interesting as we move forward, and we'll talk about that next to a degree. But we've talked about it on the previous podcast, where the CAFE legislation that hits in 2020 and the fines go through to 2021, that there's a lot happening, and EV it dominates that, because of the reward process for pure electric that the manufacturers get for registering a pure electric vehicle compared to a petrol and diesel or alternative fuel vehicle, and that getting that grams of CO2 down to minimise fines. So again, you're going to see a big push probably from January on this EV sector from the manufacturers, and I don't think we've quite seen it yet, but I think the view is that we are going to start to see that from January, subject to obviously the political outcome, but we are part of that European standard that arrives in January next year.
Yeah, and staying with used cars, AM Online headline is Cox Automotive predicts Q1 2020 car sales decline. Now, we actually touched on this last week, didn't we? Because we were talking about the most recent SMMT figures, which go up to Q3 for used sales, and you did mention Q1. So, what's your view on this?
I think the reality is, and I think what I've been trying to, it's a bit of a positive really to a certain extent, because I think we start off looking at 2019. We're approaching the end of the year. There's been some challenges, and we're going to talk about some financials from Multipoint and HRO in next. But it's been a challenging year for the sector. But we are going to finish on, give or take, performance in November and December from new and used cars. But we're on track for still achieving in excess of 10 million sales or transactions in some form or another in the sector. And I think there's testament to the industry that, considering the challenges, we've just been talking around Dieselgate that's been there. We're talking around some of the legislations with WLTP, RDE, and CAFE legislation now arriving in January next year, and to still put out in excess of 10 million vehicles through the sector, I think it's testament to what the market is. Back in 2014, we were at 9.7 million. We then rose up in 2015 to just over 10, then hit the really high point, which we, that sort of 2016 market where we did the 8.2 million used car transactions and 2.6 million new car registrations, and that hit us at that 10.7 million. Your calculations slightly off there, slightly less on both, but 10.7 million transactions overall. That was the peak, and then it started to slow down in 2017, 2018, and we are seeing a decline in 2019, but we're still in excess of that 10 million. So I think there's testament there to begin with. But then we talk about Q1 next year, and we are predicting a decline, a softening at the minute around that first quarter of 2020 in terms of used car sales. I think that's connected, one, with the political position, the uncertainty that will still possibly remain in the first quarter of next year, and supply. We've just been talking about CAP HPI and the performance of used car values, and a lot of that is about supply, and that could go either way as we enter the new year. If we come into the new year with a clean exit and we get confidence in both the business and consumer sector, and fleets and company cars, etc., get clear clarity on products and get product supply and get the right product supply, then we might see used car supply increase coming into Q1 very early. And therefore we could see an uplift in that first quarter. But I think at the minute, it's safe to say that potentially we're going to see a slight decline, albeit not a heavy one.
Yeah, and it's interesting what you were saying about the 10 million market, because this will be the 5th year in a row. And I remember sitting down with one of the franchise dealer bosses, and we were talking about the market. It seems though every year we're talking about challenges in the market, and this was probably 2 or 3 years ago when there were headwinds, challenges, and all that. And he said, well, there's still 10 million units in the market, new and used. So who wouldn't want an unfair share of that? And he had a point. That's still a very strong market.
Yeah, there's a lot going on. We know that. We know that the OEMs are being forced into investing heavily into developing sort of new technology, and some of that's for the new legislation, some of that's through evolution of where the market is heading with EVs. And, we're not even talking about hydrogen yet. There's hydrogen that's sort of sat around the corner and lots happening in that world. So, but, I think reality is we've got a strong market. We've got a strong new and used car market in the UK compared to other European countries. And, I think there's still, and yes, margins are being under pressure, but there is profitability in the touch points of a vehicle at some point in its cycle. So again, as it's moving out of new into used, into the wholesale, back into the retail, etc., there are touch points through that cycle of that vehicle, and it's about maximising that profitability and revenue from each of those touch points where possible. So again, I think if we can maintain that 10 million marketplace, then I think we're in a fairly good place.
Yeah, and we've got some results coming up. So first up from Motor Trader, the headline is HRON profits rise in 2019 on a strong order book. So this is based on the company's house report. So this is for the year ending 30th of June. So pre-tax profits are up 38.7% to £8.3 million on turnover, which is up 25.7% to 532 million. So, a very strong performance there from HRO. And the group saw higher volumes of cars sold in the period, with 3,081 units compared with 2,420 in the previous period. New car sales were up. They were up from 1,185 to 1,646, and used volumes increased as well. They were up to 1,435. So that was actually up 200 units on the previous year. So good performance there, which has seen return on capital employed increase to 29%, up from 27%.
And we talked recently, because we talked about the interim results, didn't we? That
yes,
they published, and there was quotations from the new, I can't remember what's the gentleman's name? Can you remember?
It's Ken Cho.
Yeah. I mean, he's supposed to be a fantastic operator. He knows the direction that he's taking the business, and even within the story on Motor Trader, they talk about the headcount. So that it's not just about income and revenue. They are looking at the cost control. So they've reduced their headcount from down to 523, from 553 down to 523, and they've done the same with the board as well. So really, they are putting a lot of controls in place, a lot of cost controls in place, and that combined with pushing the volume and making sure that they align with the right brands and etc., I think has performed well. I mean, they do talk about Maserati as continuing to be challenging, don't they? They are recording a pre-tax loss for Maserati, but that's basically down to the drop in UK new car registration. So again, I think all in all, not a bad result from these guys, is it? Considering, and to be aligned with the right brands.
Yeah, very strong. And it kind of echoes our story from last week about Cambria, which also saw its premium top-end sales increase. In fact, it was the margins, on the units. And, that market is holding up very well, considering all the headwinds we've mentioned. And interesting to say that they continue to hold a strong order book for new cars, and they expect to benefit from further additional new model deliveries in the remainder of this year and early 2020. So they look to be in a good position.
Yeah, and I mean, moving on to the next story, which is with Motor Trader, who are more in the used car market. This is from Multipoint, so they've seen their first half profits fall by 18% down to 9.4 million. So there again, they've seen a revenue increase of 1%. So up to 533 million, and for a full year of H1 of 528. So again, looking at some of the results, they bit of a drop, but they have been investing as well, haven't they?
They have, yeah. In this particular piece, it says that the group profit was impacted by increased overheads, which were approximately £2 million higher than the comparable period last year. But half of this increase will be reoccurring following process changes. So they've been running the rule over the business, and this looks as though it is a bit of a one-off. They also point to the opening of a new 5-acre site in Swansea, which will open in January 2020. So that's going to be a mega site. And let's not forget, they currently operate 13 sites across the country. They're the top-rated supermarkets and group, indeed, in the Motor Trader top 50 non-franchised dealers. And so, as I say, currently 13 sites, but aiming to have 20. So they're closing in on those 20 sites.
Yeah, and as you say, with some of the investment, I mean, we can't, I think we mentioned it on the podcast, actually, the 10-acre prep centre that they've just opened up in Peterborough as well, that they've now completed, and that is fully operational. And interesting, they point out that they have piloted a home delivery process within the business, and the site that it's encouraging with some positive early results. So again, they have got change. They've been investing, like I say, with the Peterborough site and the Swansea site that you've mentioned there. So again, the non-repeatable costs that they've incurred, and again, a challenging marketplace in terms of margin. But they do talk about that they've made improvements through days in stock. And it's supported strong operating cash conversion as well. So again, some good processes in place for these guys.
Yeah, and staying in the used car world for and finally, which comes from Car Dealer, and it's really who won what at the 2019 Car Dealer Used Car Awards. So this particular awards ceremony, it's been going for, I guess, 4 or 5 years now. So it's well established, it's well attended, and it's a chance for the used sector, especially the independent non-franchise sector, to get the spotlights shone on them. And there's been some good wins here. So maybe if we just cherry pick a few of the wins. So the social media user went to H.R. Owen. Dealer's Dealer went to Jamie Kaplan from Car Key. Service and Repair Outlet, Redgate Lodge. Best use of video, Auto Park UK. And interestingly, Days to Sell, which I guess is one of the categories that a lot of dealers want to win. That went to Big Motoring World. So that's a growing supermarket business that we've covered quite a bit, actually, over recent months on the podcast as they've been opening new sites.
Yeah, no, you're right, and there's obviously the used product of the year. There's one or two. There's quite a number of awards. I think so. Somebody said they didn't sit down for tea until about 9:30, I think. But
yeah,
so it's a long old evening. But it sometimes are at these kind of events. But a lot of lot to get through, a lot of sponsorship, a lot of winners there. So I'd head over to Car Dealer magazine, where you can see the full list of the winners and the highly commended, because, as I say, HR Owen was a winner. We mentioned earlier about John O'Hanlon. He was a highly commended as well for the Dealer's Dealer of the Year, along with Neil Smith from Imperial Cars. So again, head over to the website and check it out on Car Dealer magazine there. So so that's really it for this week. But next week we have got a bit of an exclusive coming, haven't we, on Saturday?
We have. We can't say who, but we've got an interview with certainly a top 10 dealer group boss.
Yeah, so that'd be interesting. We'll get the views on their recent results and performance and what's happening in their business, and get a view on what they're expecting for the close to the 2019 and what their expectations are going into the early part of 2020, if they want to share it, I suppose, is the question. But hopefully we'll get them on for next Saturday, so tune in to next week and we'll be here.
Well, you know what, Phil, I've been brushing up on my interviewing techniques, having watched Andrew Neil grilling some politicians over the course of the last week. So we'll throw some provocative questions his way.
Be careful, they're not on yet.
We don't want to scare them off.
Don't scare them. No, let's be careful here. Yeah. So again, thanks a lot for tuning in. Again, plenty of stories. There was far too many to mention on this week's podcast. I mean, we have been very selective. So again, head over to AM, head over to Motor Trader, head over to Auto Retail, Car Dealer magazine, and others, the Fleet News, etc. There's lots of stories, a lot of activity in the sector at the minute, and it certainly won't slow down. And there's a lot happening, so check them out, and we'll try and cover the main ones on a weekly basis. So tune in again next week for more from me and Curtis.
Yeah, thanks very much for tuning in. Don't forget to subscribe to us so you never miss an episode on iTunes, Spotify, Deezer, SoundCloud, and YouTube. So that's all from us. Thanks for tuning in, and we'll see you next week with our special guest.